Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is July 29th, 2026, and I want to take you through a couple of trades that we've had uh, recently, today and a couple of days ago on gold. So I figured I would take you through the sequence, show you what we show you the basis of the trade, and talk to you about a few, and then we'll look at some things that we're going to be looking at for next week about that. So here's today's trade. Um, we had a demand zone here. Okay. So what this is an area of consolidation where there is a sudden exhaustion of sellers. Okay. If we think about the contracts that are required by buyers, we can think of that as the demand for contracts in this region. If we think about the contracts that are offered up by sellers, we can think of that as the supply of contracts in this region. And so in this area of consolidation, supply and demand were in balance. And then you can see right here, there was obviously some kind of change of perception. And what happened was essentially there was an exhaustion of sellers. No one was willing to sell here anymore. And so price, of course, then ripped through as basically as buyers ran up the price chart in order to encounter willing sellers. Okay, and so when the theory is with for our trading methodology of supply and demand is we're waiting for price to return to this region with the expectation that there is going to be another wave of buying because not everybody that either had a chance to buy or people or institutions that are disciplined, they are waiting for price to return to this region in order to then place their buy orders. And so that was the theory behind this trade. And we can see when price came back here, we actually got this nice little bounce here, and this took place over the course of about a couple of hours, and that was the basis for what we had yesterday. All right, so that was the setup here. Okay, so we were looking at this, and I'm going to show you the original setup in a minute here, but this was a 4 hour basically a 4 hour zone, and I'll show this to you obviously in that time frame. This was what's referred to as a drop base rally formation, and this is a demand zone. Okay, uh, again, where supply and demand are in balance here. Once there's no longer any supply, what's left here is demand, and so we refer to this as a demand zone. Okay, this is a counter trend trade. And when I show you the daily chart in a few minutes here, you'll see, of course, that price over the last 6 months has dropped from about 5,500 down to pretty close to this 4,000 region. So we've been basically we can this, and we've also been making lower highs and lower lows. So this is a distinct downtrend that we've been in for the last 6 months on gold. And so this long here, of course, was a counter trend trade. We're way below the 50-day simple moving average. We're way below the 200 SMA. Okay, so this was a counter trend trade. So the setup here was we were basically going to be getting in at 4,012 even, and our stop out was going to be 39.95. The zone itself was $12. We were going to give it another $5 of wiggle room, and that's basically because we were looking at that major round number here of 4,000. So I figured I'll give this a little extra breathing room at 39.95. And so let me show you what the actual. So actually, before I do that, so here was the result of the trade. Price came down here. We got this nice bounce here, and we got out at more or less a two to one reward to risk ratio, and so we were putting up 170, basically 170 ticks. We're trading the micro contract, the MGC. So this is $170 of risk per contract, and when we got out at 2 to 1. We basically made $340. Okay, so that was the result of the trade. So let me show you what this looked like. Of course, before any of that happened. Okay, so here's the setup. So again, here is that drop base rally formation that we're waiting on. This is now we're looking at the 4 hour chart here, and this is what I was looking at on July 24th. So this was 5 days ago. So this was on Wednesday. Um, okay, price was basically hovering around here. Okay, so again, one of the things that caught my eye, of course, was the back line of this demand zone. And I hadn't even really looked at the price. I just drew these things, organically. And then I looked over and I saw that the precise back line was exactly at 4,000 even. Coincidence? I don't necessarily think so. Obviously, it's a psychological round number. The algorithms look at this stuff. So, I don't necessarily think it was the biggest coincidence that the back line was at 4,000 or, pretty close to it. So here's the setup. So we get in here. This is where our stop hour is going to be at 39.95. And so this was the original plan, was basically looking for roughly about 2.5 to 1. Okay. Looking at this formation here, I figured, as this thing rolled over, this might actually be something that where you'd have some consolidation in here, and also then that might stop the trade. Also, the way for most of us, when we're trading futures, these trades tend to be intraday, either by choice or for a number of people that are in funded trader programs, either trying to earn a funded account or who have already earned one and now are trading essentially what's could be thought of as real money. Um, the rules of that basically are that they have to be intraday trades. Okay, so when one is going to look at what can one make on these trades, one has to look at it from the perspective of how much can price be expected to move within, let's say, anywhere from 3 hours to 24 hours or whatever it might be. But you certainly can't look at this from a 5-day perspective. Of course, if you have your own private account and trading your own money, you can of course put on swing trades. But for most of our community members and subscribers, they're all doing this on an intraday basis. Having said that, when I go to the daily chart, I will talk about some longer term levels here. So at any rate, this was the setup here. Again, get in here, get out here at 39.95 if things don't go our way. And the original plan was to get 2.5 to 1 out of this. Okay, so that's what I was looking at. So when we got into the trade, and let me go back to the live chart here. So when we got in, and let me go and let's say bring this down to about a 30-minute level or so. So now we're looking at the same chart, but I've just dropped the time frame here. So as we got into this trade, I was looking at to see what might get in the way of the trade. I actually was not in my office yesterday, but I was monitoring things on the phone. And so let me show you what I saw yesterday when I was working on this. So this is what I was looking at on my phone yesterday. Okay, so as you can see, this is where we got into the trade. So over the course of, and this is what, a 2-hour chart here. So this thing was obviously moving nicely here. But when I looked at this after I was, I had a break in what I was doing, I did notice this formation immediately to the left here, and we can see this is a major point of consolidation. And if you look over here, you can see right here, as opposed to where we got into the trade, where there was an exhaustion of sellers, we can see right here there was an exhaustion of buyers. Okay, no one was willing to sell here anymore. Okay, and so when price dropped suddenly here, essentially as again, no one was willing to buy here, and so the sellers ran down the price chart until they can encounter willing buyers. And so this is the same narrative that I told you about the demand zone, except turned on its head. Okay, supply and demand were in balance here. Once this exhaustion of buyers occurred, okay, and buyers and the sellers ran down the price chart, where you had supply and demand here. Once there is no longer any buying, nobody's willing to buy her anymore. What's left in its wake is supply. Hence, this was a supply zone here. And so when price comes up to a supply zone, we're expecting, whether it may not necessarily roll over, but this is probably going to be a blocker of what we refer to as the profit path, or at least, it'll is a speed bump or a delay. And so at that point, this was already getting to two, I think 2 to 1, 2.25 to 1. And so this is the note that I posted to our subscribers and community members. I said, if you're in this, note the congestion area, the potential supply zone just ahead around 30.45 to 30.50. That's that range right here. That will likely slow or possibly halt the trade's progress. And that essentially was, a signal to, hey, you're already getting you're already getting, 2 to 1 or close to it. You might just want to consider not being greedy, or expect price to blow through here yesterday, because, again, this is an area that will commonly arrest a trade. So that was the signal that I sent, and we can see that was sent at around 11:50, and about an hour later, I posted this and basically saying as anticipated, and you can see price came right up to there and then just started to roll over. So that was the signal, for most of us to get out. A couple of people didn't listen, and they kind of paid the price for it. So let me show you what again. So now let's go back to the live chart here. So you can see when price came up to that region, and let me put this back to where we were looking at this before. Here's that 2 hour, basically that what I was just showing you right here. There's that formation that I just showed you on the previous slide, and you can see price came up here and then just basically just dropped, and then over the course of today, it actually overnight it came back to this level. It actually bounced again, but once we're done with a level, we're generally through with it. Okay, but so anyway, that was the focus of this setup here. Okay. So, let me show you what I'm going to be looking at next week, though. Actually, before I go on here, though, let's look to see where we are right now. So, today we had the FOMC announcement, and so there were basically two facets to that. The one that was, nominally expected was they were not going to be hiking interest rates today. Um, Having said that, we knew that there were going to be probably three dissents on the FOMC board, and in fact, if you looked at the FedWatch CMA website, they actually thought that there was, looking at the futures, there's a way that they can kind of use the futures to project a probability function, and they actually thought that there was the probability function actually suggested there was a 1 in 3 chance that they would actually hike interest rates today. So it was not a fait accompli by any stretch that they were going to leave the rates flat, but in fact they did. But you can see there was a spike uh, based on the reaction of the FOMC reaction. Having said that, even though there was a spike, that was a very short-lived spike, because if we go back and we change this back to, let's say, a 30-minute chart, you can see there's the spike, and then you can see over the last hour and a half, price just basically drove back way back down again. Okay, so this is where we closed. Okay, but you can see once the open occurred for the new session, price spiked here. So there's two facets to this spike. One is, and let me just go back to the 2 hours so I can get my notes back here. There's two facets to this. One is the economic policy, and let's just call it the macroeconomics. But the other thing is we're at contract rollover today. Okay, and if we bring this up here, you'll see that tomorrow, and really today, because the open of the Thursday session, we're going from the August contract, and we're going to be moving to the December. So there's a huge there's a huge element of this gap in there, because of the fact that you got 4 months going from the Q to the Z contract, and so there are all those considerations that go along with the contract rollover. Okay, so basically there's that going on. If you can see above here, again, right here with here, here was the demand zone for the trade that we had yesterday. Okay, up here, these are two supply zones here. We can see that this one was toast. It just kind of, this just drove through, and now we have this second one right above here, and it looks like it might actually, be a point of resistance here. I will not be running to really to place any trades, really on gold. I think throughout for the rest of the week now. My inclination is to wait for things to wait for things to kind of settle down a bit. So we'll have two, let things settle down for 2 days. Then we'll have 2 days for the weekend. Hopefully nobody says no. There's not too much dramatics coming out of the White House or any place else for the weekend. And then on Monday we'll see where things settle, and then we'll kind of get back in the saddle and looking for setups with gold. Okay, so. That's but so we have a supply zone up here, and again, so it looks like price has dug in here a bit, and now and now is sitting again right at the doorstep there. And if we just look back a little further here and we just stretch this out just a bit, we can see right here there was a little zone above here. Okay, so this zone is kind of a fresh zone, and we also have this zone that's back here. So. Um, this will be an area where we'll be looking for. I wouldn't necessarily be all that shocked if perhaps maybe this will be a point where things kind of stabilize. And then we'll see what happens again over the weekend and then into next week. It's possible that we've now created kind of a new neighborhood for gold, at which point then it might, kind of maybe grind up a little. At some point, it may make a right turn and then grind up a little more. And at that point, then you might just find in here, let's say a new demand zone might form, and then at that point, that would be a place where we could be, where we might actually start to look for some setups here. Okay, so that would be the place where we would look for something perhaps that would occur, perhaps like this. We would see price come up. Whoops, let's try that again. Price would come up, make a right turn, and then go again. And at that point, we would then have a zone where we would then look for in here, and that would be a demand zone. And then we would be looking for a retracement back here, and this is where we could go long. Okay, so that would be the theory about that. Let me show you what I'm looking at in the daily chart here. So here's the daily. So you can see, first of all, if we go back, here is our all-time high here, and that occurred at the end of January, beginning of February. And as you can see, right there's the actual all-time high at 56.27, and then here's the actual all-time high close at 53.55. Okay, so right there's our high watermark, depending on which way you want to view it. Okay, and then ever since then, there's a high, there's a low, there's a lower high, lower low, and we've made a series of lower highs and lower lows, and then here's where we are now. Okay, so in terms of daily zones, and let me just stretch this out a bit. Okay, right here, right below, if in fact we get another push down, and that it's quite possible we may just be we may just have created a new neighborhood, in which case we may actually end up breaking this downtrend. Not necessarily on the daily chart, but if we go to the 4 hour, we may end up just finding that we're actually have broken the downtrend. But we'll see what happens over the next few days here. But beneath, you can see it around 38.40 to about 38.95. There is another demand zone right here. Okay, and let me just stretch this out just a bit here. So right here, notice that we have that red candle here, and then notice that price rockets out of there with that string of four very bullish candles here. So right in here, and particularly if I broke this down into, let's say, a 4 hour chart, we would see a very clear drop based rally formation. But that red candle there kind of serves to basically, even the daily chart, that kind of highlights that. So there's a demand zone right there. Okay. Again, it still would be a counter trend trade. Okay. The other thing that we would have going for us, though, um, and let me show you this in terms of an odds enhancer, is, and let me just bring up the Bollinger Band here, and let me take the zigzag out for a moment, just to get that noise out of the way. So here's the daily Bollinger Band. And so you can see right here, um, right now we're above here, but let's just say there is another pullback. And let's say, it decides to test the 4,000 region and then drops below. When it does that, we will either drop below the Bollinger Band, or, the Bollinger Band, of course, is going to, roll over a bit. So the Bollinger Band may end up intersecting with this demand zone. That would represent an odds enhancer for a long trade here. It's not that I'm ever going to trade directly off of a Bollinger Band, but if it's at or beneath the Bollinger Band, though, which is, two standard deviations off the 20-period simple moving average, um, that is an indication that price is very stretched. And so at that point, we would be looking, that would be an odds enhancer, something that would kind of add on to, the probability of our demand zone working. Okay, so we have a demand zone over here, and then we actually have one a short distance below there. So I would expect, okay, in terms of a floor, it's quite possible that, if in fact there's another shot down, I would expect that probably 30, it would probably respect the area down to, let's say, around 37.50, given that we do have these kind of, not quite a level on a level, because there is that white space in between, but you do have these two closely spaced demand zones there. So I would expect that that's probably going to put a floor underneath if in fact we do get another shot down. In terms of supply zones, there's probably one in here. If I drop this thing down to, let's say, a 4 or 2 hour chart, you can see price rolls over in here. So there's presumably there's going to be a supply zone in here, and then there is a clear daily supply zone right over here. Okay, price comes in here. Okay, okay, there's that green candle that represents a pause there. Notice that very bearish candle there, another pause, and then those two shots down there. So this is that whole narrative here again, where we have the exhaustion of buyers here. So at any rate, that's what I'm looking at on the daily chart. So that's kind of what I got here. So again, what we're going to do is we're going to wait for things to kind of settle down over the next 2 days. That'll take us through to Friday. We then have the weekend, and then we'll see where we are on Monday, and then we'll be back in the saddle trading gold. So anyway, that's what I got. This is Mitch Firestone with Precision Trading Labs. Thank you for your time, and I will see you guys next time. Take care. Bye bye.